Landon Taylor. I'm the CEO of MacFarlane Partners. I'll admit that I'm one of them that was overlooking the significance of the growth opportunity. And I think a part of it is affordable housing gets misunderstood. Oftentimes we think about affordable housing as the kind of the lower realm, the lower 1/3 of income earners, government housing. It's much larger than that. 57% of all of the multifamily units in the country are considered affordable. And the majority of that, a total of 8.1 million of the affordable units, are not subsidized. They're just naturally occurring affordable. And the opportunity to come in, purchase assets, do some slight CapEx, improvements, and create an opportunity for cash flows that are pretty resilient. I think that's something that has been underlooked, and you're going to see a lot more people kind of coming into the market to take advantage of that. I agree that you're seeing a lot more investor interest flowing to multifamily versus office for some natural reasons. Of course, you see the volatility of office, you see the demand for office has shrunk. That's obviously kind of a no-brainer given the challenge with return to office, where it's pretty simple. In multifamily, because of the costs in this country around buying for sale, ownership has continually gone up, where the incomes have not kept up with it. There's a larger flight to rental. And so as a result of that, the resiliency with respect to vacancy rates and operating cash flows continue to be strong. And hence is why you see a kind of a portfolio, a diversification, and more money flowing into multifamily. That's probably one of the biggest issues facing especially large gateway cities, is just we're so far behind on the increase of supply. Let's take San Francisco, for example, which is where I'm from. It's been notoriously behind relative to increasing, more supply overall, but particularly affordable housing. The state has been really on San Francisco to kind of increase its flow. But the barriers have been so severe that the stock has not increased. And so what we're starting to see and trying to help be an advocate and be a part of is breaking down those barriers by introducing new innovative approaches and models to creating kind of redevelopment of existing assets, in kind of the urban core that increase density, but also increase significant flow of affordable housing units in a way that's in partnership with the city and a partnership with the community. Instead of it being the normal narrative of the community only gets some housing but doesn't benefit from all the wealth that's created around it, we've turned it upside down. We've said, we'll give you your housing, brand new housing, but also let you be a commercial real estate investor by participating in the upside around it. And we hope that will be a model that will not only work where we are, but be duplicated in Los Angeles, Seattle, New York, Chicago, and markets like that. I'm from San Francisco, so people are always asking me the question, what the heck is happening with San Francisco? And I think a lot of people were ready to write San Francisco off, and is it dying? Well, I think you can see now that it's back. And those of us who look for opportunities to gain alpha, you'll see a lot of focus on coming in and being able to buy now and kind of ride the wave as it goes back up. Look at AI. San Francisco is now being kind of the international capital of AI. I don't think that you're going to see that changing anytime soon.